Welcome to Market Voice. Today's discussion is on frequency of trading. How many trades do we take, or how often do we trade? There are various types of traders in the market, starting with the traders who work on a very short time frame of 1 minute, who are called as scalping traders, who take multiple trades in a single day, to intraday traders who take a position for a single day, max of 1 or 2 trades, and then there are traders like who take for overnight positions only, BTST or STBT traders who take the position towards the close of a given day and exit the position the very next day itself. BTST could be covering or selling of your positions. So it's called as enter today, exit tomorrow, ET and ET. Apart from that, there are swing traders who work on couple of days, say around 2 to 3 days, and in that 3 days they take 1 or 2 positions depending on the market setup. Also, there are traders who work on a weekly basis, who take 1 or 2 trades for a given week. In fact, before all of this advancement in technologies, Bombay Stock Exchange had a weekly settlement from Monday to Friday. In fact, even today in our indexes we have weekly settlement for options. So weekly settlement players on a options market, they start their week on Friday and end the week on Thursday. So every Thursday you get a settlement, and the beginning of that settlement will be the previous Friday. There are certain instruments like Fin Nifty which works on again a weekly basis but starts the week on Wednesday and ends the week on Tuesday. So there are players who work only on the settlement cycle. It could be weekly settlement or it could be monthly settlement. And then there are little bit long term players who work for a month, and there are investors who work on a year, and there are a really long term investors who work on a multi-year time frame. When it comes to the market, there is no right answer for anything. It all depends on your objective of what you want to really do. Starting with scalpers who take about 8 to 10 trades in a day, to intraday traders, ET and ET traders, swing traders, weekly traders, the settlement week traders, to short term traders who work on a monthly cycle, to medium term traders who work on yearly cycle, to a long term investors who work on multi-year cycle. Now, what is the best approach among these? If you ask me, then there is no single answer. But for a trader, we will not talk much of the investors' philosophies, because we need to have a different parameters for that to evaluate and come into a what is the frequency of the trades that we need to take. Because when it comes to investors, their objective will be more of rebalancing at certain intervals and other things. From the trader's perspective, what is the frequency of the trades that would be good for your financial health as well as your mental health. Is there any wisdom or is there any experts who have spoken about these things and who have given some kind of a benchmark or a guidelines on, for a beginner trader, what is the best approach he can take? What does the financial literature say about these things, about frequency of the trades? In fact, in this series, the objective of our discussion here is to map the warfield treaties that are given in the book called The Art of War, written by one of the greatest warrior, Sun Tzu, and see how we can map those wisdom into our trading activities. So we are seeing the warfield wisdom and we are seeing the trading activities. And today we are discussing about frequency of the trades, which means we need to see what does Sun Tzu say about frequency of the wars. So with that respect, there is one statement in the book. In the 3rd chapter, the very first statement, he says, the chapter is about strategies. So in that, the first treaty he talks of is, in the practical art of war, the best thing of all is to take the enemy's country whole and intact. To shatter and destroy it is not so good. So it is better to recapture an army entirely than to destroy it, and a company entirely than to destroy them. Which means he is talking here of, when you wage a war, do not destroy the enemy's resources. It could be the soldiers, it could be the resources, it could be their common people. Do not go on a binge of destroying. You can see in Ukraine's war, Russia kept destroying even the civilian assets, which is not a good ethics when it comes to warfare. Here we are not talking of the ethics of war or ethics of trading, but here we are talking of, Sun Tzu says, their resources, because once you conquer that country becomes part of your country and you can make use of all of those resources for your country purposes. In fact, what is the objective of you waging the war? Any country wages a war to capture the other country only for their resources, right? So in the process of capturing a country for the sake of their resources, we should not end up destroying too much of their resources. That is one aspect. He says the best of thing is to take the enemy's country whole and intact, not to shatter it and destroy it, and it is not good to adopt such a technique. The second treaty in this, it says, hence, to fight and conquer in all your battles is not supreme excellence. Let me repeat. To fight and conquer in all your battles is not supreme excellence. Supreme excellence consists in breaking the enemy's resistance without fighting. If you can capture the enemy without much of a fight, then that is the best approach. The supreme excellence lies in not waging the war at all, but capturing the enemy without much of a resistance, without much of a fight. If you can do that, that is the supreme excellence in war. Here today our discussion is about frequency of the trading and how do we map frequency of trades to the supreme excellence of not fighting and winning the enemy. See, what we are trying to say here is, do not engage into too much of trades. There are larger moves, there are small moves, and all the larger moves comes with the smaller moves only. Many a times smaller moves does not manifest into the larger moves. So what is better? If you are a scalper, then you have to play for the smaller moves and you have to do multiple trades. When you do multiple trades, then it is strain on your mental health, it is strain on your resources, limited resources, which is like time and capital. So you need to be careful of the strategy that you adopt. If you go for a scalping strategy, you will end up making small profits, but you will have to spend too much of time, energy, resources on earning small sum. Instead, if you are a trend follower, if you are trading for a capturing of a larger moves, then your trades will minimize, your transaction cost will minimize. One of the biggest factor of a scalper is his transaction cost. People don't realize that transaction cost eat away almost 50% of the profits that is being made in the industry. So if you are a trend follower, then the trend followers approach is for capturing the larger moves. When you say I will sit and capture for a larger moves, then you will not engage repeatedly into trading. Very similarly, the way Sanzu says, do not repeatedly engage yourself into too many battles. Supreme excellency lies in not fighting too much, but strategizing yourself and entering yourself in such a way that you can capture larger moves. There are larger moves in the market at all times. It's just that you need to be able to capture the at least 75% of the larger move. If you see a move from a low to a high or from a high to low, say the distance is about 100 points. If you are able to capture anything between 60 to 75 points in that larger movement of 100 points, then you are a very excellent trader. There is lot of efficiency to achieve 70% efficiency, because the market moved 100 points and you are able to capture anywhere between 60 to 75 points is really a good trading concept. That is what the trend followers try to achieve. They do not enter and exit too many times in the trade, and they enter only high probability trades. The factor here that we are discussing is frequency. So for that you need to have a high probable system. If you have a high probable system, then you can, your frequency of entry will reduce, and at the same time the whatever the entry that you take, there is higher probability of you making maximum sum out of that trade. So the supreme excellency for a trader is to not repeatedly keep on entering. It will result in fatigue, it will result in strain in resources, it will result in affecting your thought process also. So adopt a methodology which will give you fewer trades in a day or in a week or in a month, so that you can focus on devising your strategies and you can focus on observing the market without any bias. If you don't have a position, then you can observe a market without any bias. The moment you have a position in the market, your mind will start building up reasons for holding on to your positions. It will not see the market openly, objectively. You will become subjective the moment you have some positions. So if you have to really analyze the market, if you have to really develop the strategies, if you have to really create a setup or a system or rules, then it is better you do while you don't have any positions, or you analyze such of those stocks or indexes on which you have no positions at that particular moment. That way your mind will start seeing objectively. If you have a position in Reliance, then you do not analyze Reliance as a stock for your setups. You analyze some other stock, so that that stock will show you something. Then it will help you in refining your strategies. So this is very important. Keep few trades, so that few trades will reduce in transaction cost, reduce in strain on the resources. It will help you to have a very clear mind to do your research and other activities. So having said that, let us wind up today's session. Let us once again meet tomorrow with one another topic. Until then, Om Swasti.